Welcome to Wealth Echelon, your go-to destination for expert insights on finance and stocks and ETFs. Our mission is to empower you with the knowledge and strategies needed to navigate the financial markets with confidence. Whether you're a beginner looking to build a strong investment portfolio or an experienced investor seeking market trends and analysis, we've got you covered. Join us as we break down complex financial concepts, explore market opportunities, and help you climb the ladder to financial success. Subscribe now and take control of your money. Every year, millions of Americans sit down to crunch numbers, file forms, and hope for a decent refund, or at least avoid owing more than expected. It's a national ritual that sparks frustration, confusion, and even resentment. Some people complain that they're paying too much. Others point fingers at billionaires and big corporations, accusing them of dodging their fair share. And then there's the persistent rumor that half the country doesn't even pay taxes. With so much noise, half-truths, and political spins swirling around the topic, it's no wonder that most Americans are left wondering, who's actually footing the bill to keep the country running? Is it the ultra-wealthy writing massive checks to the IRS? Is it the working class losing chunks of every paycheck? Or are everyday consumers quietly carrying the weight through every purchase they make? The truth about taxes in America is far more complex and far more revealing than most headlines suggest. To truly understand who pays what and why, we need to peel back the layers of the U.S. tax system, look beyond income tax alone, and examine the real numbers hiding beneath the surface. Because when it comes to taxes, the answer isn't as simple as left or right. It's about who's really paying, how much, and what it means for the future of economic fairness in the country. When it comes to taxes in America, the subject is often clouded by political narratives, social assumptions, and economic confusion. Politicians from all sides claim to represent the average taxpayer. The wealthy are often accused of not paying their fair share, and working-class Americans frequently feel the pinch come tax season. So what's the real story? Who truly shoulders the tax burden in the United States? To unravel this, we need to explore the U.S. tax structure in detail. Who pays income taxes, payroll taxes, corporate taxes, and other federal, state, and local levies? By examining the data, breaking down the types of taxes, and analyzing the impact across various income brackets, we can get closer to the truth about who really pays taxes in America. The U.S. tax system is composed of multiple layers: federal, state, and local taxes. Within the federal structure, the main revenue streams include individual income taxes, payroll taxes, corporate income taxes, and excise taxes. The Internal Revenue Service, IRS, is responsible for collecting most federal taxes, and their data provides critical insight into the distribution of the tax burden. According to recent IRS figures, the top 1% of income earners in the U.S. pay over 40% of federal income taxes, while the top 10% pay about 70%. These numbers suggest a highly progressive income tax system where higher earners contribute disproportionately to federal revenue. However, federal income tax is just one piece of the puzzle. The truth is, not all taxes are created equally, and not all Americans are impacted the same way. While the wealthy may pay the majority of income taxes, middle and lower income Americans often pay a larger share of their income in other types of taxes. Payroll taxes, which fund Social Security and Medicare, are flat up to a certain limit, currently around $160,200 in income. That means someone earning $60,000 pays the same percentage in payroll taxes as someone earning $160,000. But beyond that point, higher income isn't taxed for Social Security. In effect, this makes payroll taxes regressive, as they represent a larger proportion of income for low and middle wage earners than for high earners. Then there's the issue of state and local taxes, which often fly under the radar in national discussions, but significantly impact average Americans. Sales taxes, property taxes, and local income taxes vary widely across states. Some states, like Texas and Florida, boast no income tax, but compensate with higher sales or property taxes. These consumption-based taxes are generally regressive as well. They take a larger share of income from poorer households because these individuals tend to spend a higher percentage of their earnings on taxable goods and services. A family earning $30,000 annually may spend nearly all of it just to survive, meaning nearly every dollar is exposed to sales tax, whereas a family earning $300,000 will likely save and invest much of their income, shielding it from those same taxes. Let's not forget corporate taxes, a category that's often misunderstood. Although corporations are taxed on their profits, those costs may be passed on to consumers through higher prices, to employees through lower wages, or to shareholders through lower returns. When large corporations receive tax cuts, as happened with the Tax Cuts and Jobs Act of 2017, debates erupt about whether the benefits truly trickle down to workers or disproportionately benefit executives and shareholders. Corporate taxation, then, is less about who writes the check and more about who ultimately bears the cost. One of the biggest misconceptions in the tax debate is that half of Americans pay no taxes. This statement is only partially true and requires nuance. It's based on the fact that roughly 40% to 50% of Americans pay no federal income tax in a given year. However, this does not mean they pay no taxes at all. Almost all working Americans pay payroll taxes, and everyone pays sales taxes on goods and services, excise taxes on items like gasoline and cigarettes, and property taxes either directly as homeowners or indirectly through rent. In fact, lower-income households often pay a higher percentage of their total income in taxes than higher-income households when all taxes are considered. We also need to consider the role of tax credits, deductions, and loopholes. High-income earners often have access to strategies that reduce their taxable income, such as investing in tax-advantaged accounts, taking capital losses to offset gains, or using pass-through entities that offer lower tax rates. The capital gains tax, which applies to income from investments, is generally lower than the tax on ordinary income like wages. This means someone earning $10 million through investments could pay a lower tax rate than a school teacher earning $60,000 a year, despite contributing more in absolute dollars. These disparities fuel the perception of unfairness and are a key reason many argue for reform. On the other hand, tax credits such as the Earned Income Tax Credit, EITC, and Child Tax Credit, CTC, significantly reduce the federal income tax burden for low-income families, sometimes eliminating it entirely or even resulting in a net refund. These credits aim to help working families with children, but are also a major reason why a significant portion of Americans pay little or no federal income tax. The broader reality is that the U.S. has one of the most progressive federal income tax systems in the world, where the wealthy contribute a larger share of tax revenue. But the total tax burden, including payroll, state, and local taxes, can be much more regressive, particularly affecting the working class. According to analysis from the Institute on Taxation and Economic Policy, ITEP, when you factor in all forms of taxation, the richest 1% pay an effective tax rate of about 23%, while the poorest 20% pay around 20%, a much smaller gap than the federal income tax data alone would suggest. And this leads to one of the biggest truths about taxes in America. How you experience the tax system often depends on where you fall in the income ladder. A billionaire may pay tens of millions in taxes and still be scrutinized for paying a lower rate than their secretary. A middle-income family might receive a tax refund, but still struggle with rising property and sales taxes. A low-income worker may not owe federal income tax, but still pay a large portion of their earnings in payroll and consumption taxes. In short, everyone pays taxes. It's just the type and proportion that differ widely. Public perception also plays a crucial role. Many Americans believe they are overtaxed, even if they benefit from credits or deductions. This perception is fueled by complex tax forms, confusing rules, and a lack of transparency in how taxes are used. When roads are riddled with potholes, public schools are underfunded, and healthcare remains expensive, taxpayers naturally question the value they receive for their contributions. Meanwhile, stories about massive corporations like Amazon or Netflix paying zero federal income tax despite billions in profits amplify frustrations and feed into the belief that the system is rigged. In terms of global comparison, the United States actually stands out for collecting relatively low tax revenue as a percentage of its gross domestic product, GDP, compared to most other advanced economies. According to the Organization for Economic Cooperation and Development, OECD, The U.S. government collects around 26% of its GDP through taxes, whereas the OECD average is about 34%. Some countries, particularly in Europe, like Denmark, Sweden, and France, collect over 40% of their GDP in taxes. This stark difference isn't just a matter of numbers. It reflects fundamentally different philosophies about the role of government, the balance between personal and public responsibility, and the extent of social safety nets. In countries like Denmark or Sweden, high taxes are exchanged for expansive social programs. Citizens in these nations benefit from free or heavily subsidized healthcare, tuition-free higher education, robust parental leave policies, subsidized childcare, and strong welfare systems. In these countries, taxes are more than just a fiscal tool. They are a form of collective investment in societal well-being. While residents pay more in taxes up front, they generally don't have to worry about massive out-of-pocket expenses for healthcare or the burden of student debt, and they often enjoy greater financial security during unemployment or retirement. By contrast, the U.S. tax system is structured around lower rates and limited redistribution. While Americans might pay less in taxes overall, they are also expected to cover many essential services on their own. Healthcare is largely privatized, higher education can cost tens or even hundreds of thousands of dollars, and childcare expenses can rival mortgage payments. For most U.S. citizens, savings, insurance, and employer benefits fill the gaps left by the government, creating a system where personal outcomes are more heavily tied to individual circumstances, such as employment, income level, and geographic location, than in many peer countries. Additionally, the lower overall tax intake in the U.S. limits the federal government's ability to fund large-scale public programs without incurring deficits. As a result, the government often relies on debt to fund major initiatives, which becomes a hot-button issue in political debates. Critics of higher taxation argue that keeping tax rates low encourages economic growth, innovation, and personal freedom. On the other hand, proponents of higher taxation, especially on the wealthy and corporations, argue that a more robust and equitable tax system could better support struggling Americans, reduce inequality, and modernize the country's infrastructure and social safety net. Ultimately, the U.S. model is a trade-off. While Americans keep more of their income, they often face higher private costs for essential services, leaving some segments of the population vulnerable. In wealthier nations with higher tax revenues, citizens pay more in taxes, but also receive broader support from their governments in return. This global perspective highlights that taxation isn't just about rates and revenue. It's about the kind of society a nation chooses to build and the level of collective responsibility it's willing to take on. So who really pays taxes in America? The short answer is everyone. Every working individual, consumer, homeowner, or renter contributes to the tax system in one way or another. But the longer and more truthful answer is that the burden is shared unevenly, shaped by a complex web of income levels, tax types, state policies, and economic behavior. While the wealthiest Americans pay the largest share of federal income taxes, with the top 1% covering over 40% of all federal income tax revenue, that doesn't tell the whole story. When other taxes are factored in, such as payroll taxes, sales taxes, excise taxes, and property taxes, the distribution of the tax burden becomes more nuanced. Middle and lower income households often pay a larger percentage of their income in these regressive taxes. For instance, someone earning $30,000 a year might pay the same payroll tax rate as someone earning $150,000. But because it takes a bigger bite out of their total income, the burden feels heavier. Additionally, sales taxes on everyday goods affect lower-income individuals more significantly, since they spend a larger portion of their income just to meet basic needs. Meanwhile, the wealthy, although contributing more in absolute dollars, often have access to legal tax reduction strategies like capital gains, tax advantages, deductions, and complex investment vehicles that lower their effective tax rate. The U.S. tax code, riddled with exemptions, loopholes, and incentives, makes it difficult to draw clear lines between fairness and inequality. But one thing is certain: no one is completely exempt from the system. Whether it's through paycheck withholdings, higher grocery bills due to sales tax, or rent inflated by property taxes? Every American plays a role in sustaining the nation's financial engine. This layered and often hidden nature of taxation is why public understanding remains murky, and why the debate over who really pays taxes is both complex and critical. That's it for today's video. If you found this helpful, don't forget to like, subscribe, and turn on notifications so you never miss an update. At Wealth Echelon, we're all about helping you navigate the world of crypto, investing, and financial growth. Have any thoughts or questions? Drop them in the comments below. I'd love to hear from you. Stay sharp, stay invested, and I'll see you in the next one.